right now we're going to delve into the area of payments and payment systems. And what we've been finding when we speak to a lot of the people that we've been talking to here for the last 2 days are people talking about the inefficiencies in the payment system landscape and what can be done to address those. Well, joining us to discuss just exactly that are Peter Lightfoot. We have a really big panel here to discuss this. Peter Lightfoot is the Managing Director, Treasury Markets at RBS Global Banking and Markets. Naresh Nagir is the Executive Vice President and Chief Risk Officer at CLS Bank International. Bok Cheng Neo is the head of GTB at OCBC Bank. Steve Nichols is the Chief Executive Director, Payments at, is it NZ?
Payments New Zealand.
In Payments New Zealand. And Chris Salmon is Chief Cashier and Executive Director for Banking Services at the Bank of England. Thanks so much for joining us, all of you today. Let's start with what exactly are these inefficiencies that everybody is talking about? Just tell us some examples of that, and then we'll get along to how they can be addressed.
Well, I think the biggest inefficiencies we've got at the moment are really coming in the regulatory space, where you've got some banks around the world are heavily regulated, need to put a lot of collateral up, collateral is very expensive, and you've got other banks in less regulated areas can get away with holding much less. Therefore, it's quite a bit harder for banks like the UK banks, the Dutch banks, to have to hold high levels of collateral to do effectively the same job as others. So when it comes to competitive pricing, some are at a disadvantage, even though they're in a more tightly regulated area.
Well, I might steer that to the most significant risks that are in front of us in this business, and I would pick two, for example. One is nostro concentration and nostro failure being a significant industry issue that we are helping resolve with the industry. And a second is the unique nature of third-party risks, and by that I mean third parties to CLS as a settlement platform, and the inefficiencies with their access, not in a business as usual, but in a contingency. So those, I would say, are the two key risks in front of the industry from my perspective.
From my standpoint, I come from Asia. So in Asia, the inefficiency stems from the fact that many markets and economies in Asia have got FX control. For example, in China and Malaysia, in order to do a cross-border payment, there are a lot of supporting documents that you need to submit to the regulators. The other thing is in Asia, there are a lot of markets are very check-centric, and payments in these markets a lot of time are not real-time at this point in time.
So from a New Zealand perspective, inefficiencies were based around systemic risk and liquidity risk in an old, outdated interchange system. So as a result of that, New Zealand has replaced that with a new system, which has sped up the process of funds flowing through the market and also removed the systemic risk by replacing the old system with a new one.
So I think Peter rightly raised the important role of regulation in driving change in liquidity practices in the payments world. I disagree slightly with his take that there's a very uneven playing field. I think actually what's happened is the global regulatory community has raised the bar on liquidity standards in general, and the banking community is having to respond to that.
So what can we do to make the situation better, to address some of these inefficiencies? What do you want to see?
I'd actually like to see a lot more cooperation between the banks, the regulators, in understanding what the problem is. We know we've got to be regulated, there's no doubt about it, and it's a good thing. So if we start from that position, we start from understanding the regulator's position, that's a good place to be. So let's go, let's work out, so we don't bring in unintended consequences, unintended costs. You know, we know there's got to be costs, we accept that, but let's make sure we've got the right level of costs, that we still manage the payments to go through, which at the end of the day is what we're trying to do, efficiently, timely, and we really need to focus on that. And I think the best way is a collaborative approach, and where possible, a global approach. A lot of the global banks, you know, we've got pockets of collateral all over the place. It's an expensive way to operate.
So ideally, who needs to be around that table, and what are the conversations should they be having?
Well, the practitioners of each, whatever the area is, in our case, you're looking about intraday liquidity. We need those practitioners sitting with the regulators who are overseeing intraday liquidity, and let's talk about it. What are they trying to save, to make sure is safe? What are we trying to do? We know it's going to cost money, but let's do it efficiently. And it does work in places. In London, we've done some good work with the Bank of England in developing databases, and that's gone well, Chris, hasn't it?
Tell us about that.
So we've been rolling out through the Bank of England a business intelligence database which enables the direct members of our high-value payment system to get much better high-quality data about their use of liquidity during the day, just one day later, which gives them a richer information source to manage their liquidity in payment systems.
I also see the importance of really engaging the regulators, like what Peter said. In Asia, for example, Asia being one of the last region left with growth, we are seeing a lot of funds flows into Asia. And the regulators increasingly are very concerned about the KYC and AML behind all these funds flows. I think it's important to engage the regulators, for them to also to talk to the bankers to understand what the concerns are, and some of the practical aspect of really administering what they're trying to achieve. Because I think as regulators raise the bar in terms of sanction screening on KYC and AML, it's getting very, very onerous and expensive.
Let's just tell everybody what KYC means, know your client, okay? So let's come back to you, Naresh, and tell us what you've been, your take on what you've been hearing so far.
Well, CLS is in a unique situation in that we're governed by 23 central banks because of the currencies that we settle. And we sit in a large room 3 times a year with 22 other central bankers in the room having that dialogue. So that consistency of regulation and the direction that it's evolving in is critically important to us, and we see it in practice. And we are able to spot the inconsistencies and point them out on behalf of the industry for our space in the payment system. We're not that broad, it's just FX settlement, but in that space we actually fight and challenge for that global consistency.
Steve?
I guess from our point of view, I take a slightly different approach here because obviously I'm thinking of this from a retail payments perspective, and I guess the efficiencies that we've put in place with this new system have resulted in the removal of liquidity risk from our retail payment system by more frequent exchanges of funds throughout the day. So we've shortened the length and depth of the liquidity issues. We've resolved the systemic issues by the replacement of an aging system. And I guess that's the way we've addressed the efficiency issue.
What role does SWIFT have to play here for you?
SWIFT is key because clearly all the messages that are flying around the world, we need to understand what our profiles look like. We need SWIFT to help develop the messages that we can then use in when we're being regulated. What does our data look, what does our flow through the day look like? We need to be able to produce a graph that shows from 6 a.m. to 5 p.m. this is what my account looked like, whether it's myself as a direct clearer or an indirect participant somewhere. We need that. There's another key role I think SWIFT can play is in a contingency when a Nostro provider, say a CLS, can't make its payments, how quickly can we move? SWIFT have got the knowledge, they've got the systems, I'm sure, to find a way to redirect payments quickly to another provider instead of it taking months at times.
I think SWIFT is a terrific partner to CLS for all the reasons that Peter just went into, but it is also a risk concentration from an infrastructure standpoint. And if SWIFT, for some reason, is unable to deliver even for a short period of time, I think we feel the crippling effect of it. So it's a dependency that I would objectively like to wean ourselves away from, but it is what it is. And so far they've done an absolutely excellent job, and their resilience is to be envied.
I think SWIFT, I tend to agree with Peter's standards. I think as opposed to many economies develop their own proprietary payment standards, I think if everybody can follow SWIFT as a global standards, I think that will take away a lot of inefficiency across domestic as well as cross-border payments.
From a New Zealand perspective, the relationship with SWIFT spans both our wholesale and also our retail payment system, so it's a very important relationship. And obviously the retail payment system we're looking to as a building block for also a change to our file format that we're using across that system, and that will be using SWIFT messaging systems to achieve that. So the ISO 20022 standards are very important to New Zealand potentially going forward as we look to change that file format.
Okay.
So I think from a official sector perspective, the key thing I want from SWIFT is absolute resilience, given its key role, and it's pretty good in that perspective, but that's what we want first and foremost. And then I think beyond that, a point's already been made, is there's a lot of information within the SWIFT system from all of its networks, and as we're pushing the banks to manage payment flows better, finding ways to utilize that information is something which I think a challenge for SWIFT and its member banks to work through.
Okay, well, gentlemen, we'll leave it there. Thanks so much for joining us. Pleasure to have you all with us today.